What kind of loan do you need? Do you even need a loan to buy a house or not? What is FHA? What is conventional loan? This is what we're going to talk about. Hello, I'm Nas, Realtor Daddy, host of Wisdom Wednesday TV show. Once a great topic, mortgage, real estate, with our special guest, Miss Dipika. How you doing? Welcome.
Thank you so much. It's good to be here.
We can never enough talk about this topic because without this topic, hey, no loans, no home.
Absolutely.
Tell us who you are, what do you do, where are you from?
Yes, my last name is Contractor, and we can blame or place the blame squarely on my husband for that. Probably, let me, if I have to put it in mortgage terms, I'm the only contractor you get to hire for free who's going to bring you money versus charging you. So that is my unique USP. So I live with my husband and my daughter. She's a senior in Trinity University in San Antonio. We are very proud of her. She's got a lot of feathers in her hat. She's going to be graduating this May. We have also a four-legged, who we could say dear pet of ours, which we flew 10,000 miles to keep with us. Yeah, to live with us.
Wow, yeah, so fantastic. And yes, your name is special. I like your USP, unique selling position. Contractor, the only contractor that you can hire for free to get you a house, man. How cool is that? I think that's a
That,
blessing.
yes, yes, a lot of things to be grateful for.
So tell us, what do you do?
I'm a mortgage loan officer. I specialize in various type of loans. I hang my license with one of the largest brokerages of the country. We have more than 2,400 loan officers and growing. And most importantly, we work with more than 250 lenders, loans of every possible type. We try to streamline or to structure to fit each individual's requirement.
What is the name of your mortgage company?
I work with Loan Factory.
Another cool name, right? You cannot think, you cannot forget about that. Loan Factory.
Absolutely. Yes. Yes. It's very simple. It says it all.
How long you been in the industry?
I started during COVID. COVID was responsible for me being a loan officer, and it's been a quite a good journey for me, I would say.
Yeah. What about that recognition that you got last month? Tell me a little bit about that.
I was recognized as the top third originating number of loans originated in non-QM space. Basically means I specialize in no income verification loans for investors. So investors trust me with financing their properties, and it's been quite an interesting journey because it is not the usual conventional type of loan. It requires a lot of structuring, a lot of math, I would say, to make sure the ratio matches. In other words, it's called a DSCR loan, a debt service coverage ratio. So ratio plays an important part, and as well as the fact that investors, they own multiple properties and they require as minimum documentation work as possible, and that's something which I specialize in.
Do you have some information to share with us?
Yes, absolutely. I'll be glad to go over a few basic information on how loans, what kind of loans that are usually common in the market. And if you have any questions, please feel free to ask me.
Sure. Go ahead.
So
Your show.
yeah, so this begins with these are the basic loan programs for first-time home buyers, and they are categorized under conventional, FHA, VA, and also state and local programs. Now, conventional loan programs are recognized by Fannie Mae, Freddie Mac. I'm sure you've heard of these GSEs. FHA loans are specifically for those who require a little bit of help with their debts. If they have a little bit more debt than what is required by conventional loans, we can go with an FHA loan. VA loans are, of course, streamlined for veterans, and state and local programs are those that offer down payment assistance. We work with many lenders who offer down payment assistance as well, and that is one of those programs which can be available. And to move on to what is the next obvious question is the pillars of a pre-approval. It's so important for any borrower, any buyer to get pre-approved. realtors like yourself, Nasir, I'm sure you agree with me that you would like to know how much house your client is qualified to buy.
Sure.
And that is something, it makes it very easy for you to look for the perfect home for him, or to find them the perfect home. And it saves on time from both ends. And this is how we begin with strong credit health. See, credit score is so important. And if the planning to buy a home can begin as in 6 months in advance, and start by building your credit score. Now, how would you build your credit score? Or rather, what is considered to be a good credit score? I mean, it's not like, scores which are termed to be below, say, about 620 are bad in any way. It's just that it's very simple. If you have a higher score, then you have a lower interest rate. That's how all lenders we work with basically offer their best interest rate deal. So credit score is very important, and pay your bills on time. Never miss a payment. That's very, very important. The next part of it is stable income and employment. So 2 year history is typically required by conventional lenders. They require to either, if you are a full-time employee, then W-2s. That's important for you to have a 2 year work history with your employment. Now, the third part of it is also very important, is for you, for a buyer to realize what is his debt versus income. Now, debt can include car loans, it can include credit card bills, personal loans, and your mortgage. So when you calculate after all these debts, what are you left with end of the month? You need something to eat. So every lender would look at it to see how much house you can be qualified to buy based on your income. And also, what looks good when you go to buy a house in the eyes of a seller is that you're bringing some money to the table. Now, if you have funds, we can go as low as 3.5%, even zero down payment. That will be the down payment assistance program. And also 20%, if you can bring 20% of the purchase price, that will not have to include mortgage insurance, which is again an additional savings a month. And in the eyes of the seller, it looks like you are a serious buyer. You come with pre-qualification, and you also have sufficient funds to close the loan on time, or to be rather eligible for a loan as well. So these are the real important pillars for a pre-approval. So what you can and you cannot use towards your down payment and closing costs. You can use your 401k, although I would suggest that you talk to a CPA to make sure that you're able to use those funds without paying taxes. Gift funds are definitely allowed, and any funds that you have in terms of stock, bonds, and cash. Now, when I say cash, it does not mean cash under your pillow or your mattress. That was probably not going to be acceptable by lenders. So you cannot even use your credit card, or you cannot take out a personal loan to pay for your down payment. So these are some basic information for down payment and how they can be used. And this is where I would want to touch upon my favorite type of loan. It's called the DSCR loan, and it's all a favorite of all my investors and realtors. I have so many realtor partners who absolutely love this, because it's not just because of the minimal documentation, Nasir. It's because of the fact that they can close the loan easy, fast. I have closed a DSCR loan in 10 days from start to finish. I mean, it's that simple, it's that seamless, and every investor who does not, who they don't. I've worked with investors who communicate only by text. They don't have time to pick up the phone and call. So they get it. They know there are 2, 3 basic documents which we will need, and that's it. We can even work with, I have investors who own multiple properties, like 40, 50 properties, and they don't need all these investments, or rather paperwork, for them to be able to process for a loan. So they prefer it seamless, they prefer it fast, and that's how I work. So this is something which is all my favorite topic. I can go on for a little longer if on this DSCR loans. But here are a couple of testimonials of my clients who were really, very, very happy with my work. The rest of it can be found on my website. It's my name, dipikacontractor.com. So I can be reached easily if you just log into my website, and my phone number as well is available on my website and very easily accessible. So this is some basic information, and I'm glad I got the opportunity to share with you.
Thank you so much. Very good presentation, basic information. I mean, wonderful. Not too little, not too much. I love it. Couple of questions.
Yes.
One, you mentioned something about buyer preparation 6 months before actually buying.
Yes.
Can you elaborate on that, please?
Absolutely. So for someone who's looking to build their credit score, and say for example if they've missed a couple of payments, they were late, and or they forgot about them, whatever it may be, that could pull back their credit score, pull it down. So, or if they had a big purchase like a car, or they opened a new credit account or a new credit card or a new bank account, when there is a hard pull or a hard inquiry on your credit report, it usually makes an impact on your credit score. So ideally, for the score to be able to heal, to come back to a higher level, it takes time. So the 6 months is a good time to get the finances or to make your payments on time, and to build your credit score. That is one of the main reasons, or the timeline, which would be ideal. And a simple way to also bump up your score is, say, for example, if you are making a $500 payment every month on your credit card, instead of making it $500 every month, you can make it $250 twice a month. So it could basically trick the system, sometimes it works, to report that you have made payment twice. And that is also in a way helpful to boost up your credit score.
Fantastic. What percentage we're looking at for the DSCR loan down payment?
Excellent question. So how does the DSCR ratio work? The loan is eligible, or rather, eligibility of the loan is based on rent versus mortgage. So the rent should be either equal or higher than the mortgage. So in order for that to happen, ideally the price range of the home would be between 300 to 350,000 with a 20% down payment. Then the rent and the mortgage would be a great match. It should be a one match. That's called a DSCR ratio, which means a 1:1, a rent versus mortgage. So 20 to 25% down payment is perfect.
Anything that we're expecting in the mortgage industry in 2026?
A lot of things. I mean, I'm sure you've seen the news recently about big 200 billion buyback of mortgage-backed securities ordered by our president to Fannie Mae and Freddie Mac. That is based on the intention to lower interest rates. I mean, we've all been waiting for interest rates to drop. This is definitely going to influence the market, as the market gurus are predicting. The impact was already seen in the last 2 days. The rates really did a good drop, and a lot of people were able to lock in their rates for refinancing. The predictions are that there is some more room for the drop, but you cannot really guarantee any of these claims. Anything can happen in one day. The markets can go up and down. Literally, the last 2 days went up 30 basis points, and the day before it was down 15 basis points or something around that range. So the volatility is there, but it's the trend from last year is definitely better, and it's looking optimistic.
What do you do in your free time?
I would love to have some free time. I've been working really long hours recently, but normally if I were to use a free time of mine, I love to paint. It's one of my favorite hobbies, and it's something which I would love to pursue some more. Favorite food. I'm South Indian. I feel like if you can help somebody, by all means, do what you can to help someone who cannot return it back to you. That would be the best. I'm also involved with the Rotary Club, which is also an international organization. I'm part of the Rotary Club of Sugarland, and that's basically what we do is community service. So it's a beautiful organization, and I'm I would like to be able to contribute more, but I also would like to acknowledge my realtor partners. Nazir. I mean, they have been incredible in their encouragement and support. They know who they are. And I want to say thank you to you, for giving me this opportunity to share my 2 cents. And I'm grateful. Thank you so much.
Yes, thank you for being with us, adding value. We're all about the value at Unimix. Me too, personally and professionally, we want to give value. Thank you spending some time with us. We definitely would love to have you again one more time.
Thank you so much. I really appreciate the opportunity.
Bye-bye.